But does anybody in this room want to live with less? With less gasoline, with less petrochemicals, with less of the elements? Every single economy in the world today is reliant on cheap energy. That's the primary driver of the quality of life. And so we must discover more energy. We must have alternative energy, that's for sure, but it is not yet competitive with oil. So here you see the graph going back to 2006. It's a 3-year graph. And you can see how oil went to $145 at the peak, and that was in July of 2008. And then the world collapsed, and commodities collapsed with it, and oil fell from 145 to 32.71 in this graph here. And now it's gone back up. So we're in the process now of bringing more and more discovery companies back into this market in order to discover the energy sources that we're going to need. I know many of you here are probably strong environmentalists, believe in the green movement, and I believe in the green movement too, but it will not be here for another 10, 20, or 30 years in full force. So we're going to have to rely on fossil fuels. That means we're going to have to discover fossil fuels. That means you have an opportunity as an investor to invest in these in these companies that are exploring for the fossil fuels. What about the US dollar? It's very important because most commodities, most assets in the world today that are traded are valued in US dollars. And here you can see tremendous volatility in the dollar. The dollar fell down to 71 cents in March of 2008. The Canadian dollar moved much, much higher, and it was a great investment to be short the US dollar and long the Canadian dollar. But that's not a discovery investing, that's a speculative trade. It's a trade in the currency market. But here you can see the dollar increased in value significantly over the last year or so, and now it's fallen. So that I think you're going to have commodity prices be very strong as we go forward. What does that mean for you? Well, if you're a discovery investor and you're looking in the resource sector of the discovery space, it'll be very good because the price of copper, the price of lead, the price of natural gas, the price of oil should go up with a weakening U.S. currency. So this is a good time to be in the discovery space. This graph is the Morgan Stanley Commodity-Related Index. It is an index of 20 large-cap commodity companies. And you can see how badly they were hurt in the decline. They fell from over 1,000 points to 363 points. That's 70% decline. So this has been a absolutely devastating decline in the marketplace. And again, how do we replenish those assets that we've lost? And one of the answers, not the only answer, but one of the answers to you in the audience tonight is to look at discovery as a part of your portfolio because you'll get some big returns. And we've actually seen since last October, we've seen a pretty good run-up in the commodity stocks that are in this index. You can see it's now resting at about 660. So it's only off about 40% from where it was. Now, I want to just do one example of a company, and I don't own this company, but I want to give you an example of the wealth that you can create through discovery. This company is called Canplatz. It's a Canadian stock, trades on the Toronto Stock Exchange Venture Exchange. And Canplatz made a discovery in October. If you look at the graph, you'll see in October of 2007. And look at the tremendous value creation. Stock was trading at 20 cents. When the drill came out of the hole, they knew they had a discovery hole of gold. Again, it's in Mexico. In fact, the discovery hole CR06, if you look at the graph here, intersected 183 meters, averaging 1.61 grams of gold per ton. That's a pretty good intersection. 12.84 grams of silver, a little less than half an ounce of silver, 0.5% of lead, and 0.33% of zinc. The stock went from 20 cents to $3.58 in its first run. Then it ran up to $5.28. And even though it's been through this tremendous downturn in the markets since July of 2008, it's still selling for $2.31. So if you had purchased 1,000 shares of this at 20 cents, you would have put $200 essentially. Let's just round it out, you would have put about $200 in to this stock in October of 2007. And even after the decline, this terrible decline in the market over the last year, you would now have $2,300. So this is the kind of gain. This is what we call, in the slang term, I guess, if I can use it, a 10-bagger. And you know, again, I know what you're thinking out there. You're thinking, well, does this always happen? And the answer is no, it doesn't. But if you diversify properly, as I'll show you in a minute, it can help you. The past 6 decades now transmogrify to the future. I know you're all in the audience. I know you know what transmogrify means. It means transforms badly to the future. So we will return to new growth engines. I think that the BRICS and the BRACs, Brazil, Russia, India, and China, Brazil, Russia, Australia, and Canada, have now come of age, and they're going to play a new role in the economic reestablishment of the world. The positive sum Western world is now at risk. By that I mean I think our quality of life has to pan out a little bit here, has to flatten out. Discoveries will be critical to world growth and to increased quality of life. I know I've stressed that several times. And the extractive industries, the mining industry, the lumber industry, the oil and gas industry will return to prominence, but they will lag in the U.S. But the key element I want you to remember in tonight's lecture is discoveries in cheap, cleaner, conventional energy, fertilizers, water technology, healthcare, and alternative energy sources will be of utmost importance, and they will be valued accordingly as they are discovered. What are the milestones? What things do you look for? I've mainly talked about resources tonight because I enjoy that. I enjoy working in the resource industry. But this world is wide open for you. For example, nanotechnology, which is where we work with very small particles of metals and other elements, are being now used for electrical transmission, for semiconductors, for lithium batteries, for the new battery technology. Infectious disease treatment, vaccines. We've all heard about H1N1, the flu virus. They're working hard to make a discovery in that area. What about the environment? CO2, carbon dioxide capture and sequestration. Figuring out how do we deal with carbon dioxide. We're going to need discoveries there. Hydrogen fuel cells are still in their infancy. And so some of you may even work in that industry. But you really don't have to, and that's the key thing about discovery. You can invest in these industries if you have an interest. And it makes it a lot of fun. It makes investing a lot of fun. So there are other things here. Fuel technology, nuclear fuels, gas to diesel, coal to liquids. All of these technologies are coming down the pipe. And there are companies out there today that you can look at, you can learn about, that are doing these things. You can see the rest of these, and this is only a partial list, and so I won't spend any more time on it. But in another lecture, maybe next week, we'll go through these in particular and talk in more detail. I just want to give you tonight a flavor of the kinds of things you can get interested in from the discovery perspective. Okay, how do you do it? This is probably the guts of it, the most important part, and I think that I've worked on this a long time, and this was sort of the whole essence of my study of discovery. There are 8 steps to discovery investing, okay? And you do them in order, 1 through 8. And these will make sense to you, I think, as we go through them. First of all, you need to think about your portfolio. You need to have a plan for allocation of assets. Do you want to be in stocks or bonds? Or do you want to be in hard assets? Within this, do you want to have a discovery portfolio? And you have to put numbers on those. You have to decide whether you want to be 5% or 10% in discovery, and whether you want to be 40% in bonds and 60%. And lots of times, for those of you who are not really experienced at this, you hire a financial planner and you learn from them. But we'll talk about this again in the future too. Secondly, most important,